It's such a red herring. I think there are many reasons why people say free speech. I mean, it's an easy thing. Then you can.
Hello and welcome to this special show on Bloomberg Quint. I am Pradeep Pandya. Mutual fund houses and portfolio managers will be given access to commodities derivative market. SEBI is working on the regulatory framework and will come out with the notifications soon. I am also joined by my colleague Sajid Mangat. Hi
Pradeep. This will also give the commodities derivative market access to 21 lakh crore cash pile lying with the mutual fund houses. Joining us now is Lakshmi Iyer of Kotak Mutual Fund, and she's also CIO of the debt segment there. And
also PH Ravi Kumar, the founding MD of NCDX, and Sudeep Bandopadhyay of Indie Trade Capital. Gentlemen, welcome to the show. And Sajid, to start off, today you have spoken to the senior SEBI officials. What kind of indication do you get? How soon could we expect the final regulations to come out?
So Pradeep, this has been happening for last few years. I think the fund houses have been asking, and the commodity exchanges has been asking SEBI that you should allow mutual funds into commodity segment, because considering that commodities are now also under the oversight of SEBI there, and SEBI has been working with various fund houses and intermediaries to bring in a framework of bringing mutual funds gradually into the commodities market, so that you increase the depth and the liquidity in the market. Fund houses like Kotak have been working very closely with the regulator as well. And today we had Mr. Mohanty, SK Mohanty, who's the executive director and at SEBI, and who looks at commodities segment there. He said very categorically that it's in very advanced stages, and the frameworks are expected to come out in the next couple of months. That's what he said. But this is something which is happening for last couple of years, so I would caution our viewers to understand that it's been in the talks. Till the time the framework comes in, you don't know how much mutual fund be able to participate in the commodities market.
Okay. Well, I think the regulator has also been kind of interacting with market participants, Lakshmi. So have there been some meetings with MFI, with individual fund houses, and what's the kind of feel that you have?
So as Sajid rightly pointed out, this has been on the regulator's radar for quite some time. It was a natural progression, given that we have seen a regulatory merge between the FMC and the SEBI. So there have been at various points in time, some sort of a discussion, not like a discussion paper, but discussion groups that have been floated to give in suggestions. So yes, that has been going on, but honestly, I remain circumspect with respect to the timelines, because there has been nothing which has been communicated so far, and yes, the dialogues have been on for quite some time.
Lakshmi, I wanted to bring in here, SEBI allowed AIFs to participate in the commodities market, and as I understand, only 2 AIFs have already started participating, but the volumes aren't much. What are the regulatory hurdles for institutions like AIFs to come in? And this is category 3 AIFs, where a lot of hedge funds or any other funds are going to come in. What is it that preventing AIFs to come in a big way into the commodities market?
No, so it's not that there is any reservation with respect to AIFs. We are already seeing AIFs based on underlying being equity, so that any which ways has been going on. Commodities is a relatively newer space within the asset management industry, and specific to that, either to the mutual fund PMS or the AIF. So it's a matter of time that there could be some teething trouble with respect to how a cash position is treated vis-a-vis a derivatives position. So hypothetically, if you were to do a long short kind of a strategy, how exactly will you do, how frequently will you do rollovers, etc. So there are those teething trouble which needs to be ironed out before you decisively go and launch. So as we speak right now, I am in the know of certain entities which want to launch such funds, but obviously are trying to plug in all these things. So it is a good beginning, I would say, and if it gets extended to mutual funds also, I think it would be a welcome step in that direction.
So AIFs are the alternative investment funds, the vehicles that are not exactly the mutual funds, but to talk about mutual funds, because that will give access to the entire masses. It will bring in the retail investors into their ambit. As a fund manager, are you prepared to launch a product on commodities? Suppose that the regulator really keeps his word, and the regulation, the rules, and the detailed framework is out within say 6 months or so.
So it is not about preparedness, it is like asking a guy, are you prepared for marriage? He's never prepared, right? So you have to just get into the thing. So back in 2007, if I were to give you a case in point, Kotak is an active manager, right? We launched our first gold ETF back in 2007, and that was a maiden foray that we did in the ETF space, starting with commodities such as gold. We started off, and at that point in time, there were 2 ETFs based on gold, which is a commodity, and now there are more than a dozen of them. So the point is that globally there are a lot of products, a lot of innovations which happen around ETFs. I think it's too premature to expect those kind of variations or innovations to come about. In India also specifically, if you see the commodities that are getting traded, it's predominantly bullion, followed by maybe energy space. So these two entities contribute to more than 60% of the total volumes on the exchange, and then you have of course the metals and the other commodities, which is largely agri commodities. So I think if something like this comes about, it will be a welcome change to add to your entire, I would say, product bouquet. But to expect any major innovations, I think we would want to wait and watch as to how the regulations will be. Is it going to be just something which allows you an entry so that you launch basic things? Could it be something which just offers you a hedge on your current portfolio, which is largely gold ETF, etc.? Those things need to be, I would say, studied in detail. But I think mutual fund houses will be fairly prepared once the regulatory framework is out. Then you do your homework and then go ahead and launch.
Okay. Let's also hear out what the MD and CEO of MCX, Mrugank Paranjape, had to say about this.
SEBI is absolutely keen to look at how mutual funds and PMS providers can also be allowed. The depth that it brings to the market has 2 implications. First, it gets long-term money to the market. Again, as all of us have seen our experience in the equity markets, the sort of money that comes through the SIPs into the equity markets today, it is really the retail long-term money, which is the big beneficiary for the market as a whole, that comes in through the participation of people like mutual funds.
Now let's bring in Mr. P.H. Ravi Kumar into this discussion. Mr. Ravi Kumar was the founding MD of NCDX, so a market veteran who kind of oversaw the initial phase of commodity markets in India. Mr. Ravi Kumar, do you think Indian commodity market is ready for this, and would markets really benefit if mutual funds are allowed to trade and invest actively?
Before you adopt, we have long-term institutions, long-term funds, as well as the participation to come on to these things. But I don't think the actual participation in the near future. It is not enough.
Try and get back to Mr. Ravi Kumar once again. But Sudeep, what's your view on this?
Well, Pradeep, I think it's a very, very welcome development. It has been on the cards for a very long time. Look, if you go back to the history of Indian equity markets, they really, market started picking up, the volumes picked up, the market became thriving, the depth came only after institutions were allowed to participate in the market, particularly the foreign institutions, and different types of instruments were issued, whether it's the futures or the options. Commodity market in India, like Mr. Ravi Kumar and his colleagues and also MCX did pioneering work, and the commodity exchanges have been well established. After the merger of FMC with SEBI, we are all waiting for the next level of growth for the commodity exchanges, and that can only come when new instruments are issued, allowed to be traded, so options, and that's coming. Also, it's very critical for increasing the depth of the market that institutions are allowed to participate. Now, foreign institutions being allowed in commodities may be a couple of steps away, but domestic institutions like mutual funds, which are again regulated by SEBI, I think that's the first step, and SEBI is exactly doing that. First, they allowed the AIF, and remember that AIF, they allowed in end June. I think, if I remember rightly, 21st June, they came with a circular which allowed AIFs. So it's a little too early to really judge whether that move had been successful or not. It's only a few months. I'm sure a lot of AIFs will come going forward. And as and when they permit mutual fund, and I'm hoping they permit quickly, I think the market depth will increase and it will be a thriving market. Also remember, globally, commodity derivatives market is a much bigger market than equity derivatives and equity market. So I think for healthy development of Indian financial markets, it's critical that commodity derivative market gets the institutional participants. It's extremely critical. Also, one more fact I wanted to bring, that so much of money is coming in the financial market. Got disconnected.
Yes, no, please go ahead. So I think Sudeep is...
I was saying that so much of money, Pradeep, is coming in the financial markets, and if there are alternate asset classes, it is so much better instead of all the money coming to the markets chasing the equities.
Lakshmi, I just want to check with you one on a global scale. Has mutual funds entry into derivative markets been as successful as we are talking about, or it's just an experiment which is still going on? Because what I've heard from some of the exchange officials is that mutual funds haven't been able to bring in that kind of drastic change in the way liquidity comes into the commodity market.
You're talking about globally?
Globally.
So globally, even ETFs, for example, gold ETFs, for instance, are allowed derivatives, which is not allowed here in Indian markets. And as I said, it's always a chicken or egg story, So you want the liquidity to come first, and then the institutions participate, and sometimes vice versa. And globally, there are not only direct asset class-based strategies, but also reverse strategies. So, for example, if crude moves higher and you want to profit against it, then also there are ETFs, so like reverse ETFs on commodities, 3x ETFs, 2x on the lower side. So there are multiple variations and permutation combinations, and none of this would be possible if you do not have a vibrant derivatives market on each of these underlyings.
But given in India, even in the equities segment, writing of contracts are not allowed for mutual funds. Do you expect that kind of freedom coming from mutual fund in the commodities segment where retail money is involved?
So my sense is that you should first start having liquids and then start chewing if you don't have teeth. So we are in that kind of a phase right now where you are at the teething stage. So when you're at the teething stage, you can't try to bite into hard solids or try to crack a walnut with your teeth, because the teeth will just break or it will permanently damage it. So let's take it one step at a time. I think the regulator is doing a good job of first having introduced AIFs. It is under the asset management umbrella. Then obviously, as we read about it and we hear about it, there is a talk of allowing mutual funds to get into this space. So there is an attempt to diversify the retail portfolio. There is a flow of money coming into the system, and which is very evident. So start with plain vanilla structures and then spice up your ice cream. I think
do we have enough products in the mutual funds in the commodity space to to service the mutual fund industry?
See, the commodity
except for the
space,
gold.
No, I understand. So if you X gold or maybe X maybe a bullion or a silver, there may be not more than 2 dozen commodities compared to equities, which are more than 5,000 in number. But it's not about the number, it's about the concept. So if you're convinced that, okay, I can launch a commodities based product based on crude. For example, crude is widely tracked not only in the rest of the world but also in India. So I think it could be a small beginning that you start with, or as I said, even to hedge a basket of your commodity ETFs right now, it could be a beginning in that direction. We can't start with exotics. I mean, very few people could be gifted like Michael Jackson who can dance as they learn to walk. But we all have to start learning to walk before we learn to dance.
Exactly. So, Mr. Ravi Kumar, if you could, look at it from the regulators or exchanges perspective, the way they have developed the market so far, what's your view? Okay, I think again disconnected. We can't speak to Mr. Ravi Kumar. Sudeep, how do you really see it? Do you think that market is matured enough for the mutual funds entry, like we just discussed? And there were several issues, like the integrity issue in one segment of the commodity markets. Do you think regulators have effectively addressed it?
Well, Pradeep, I think, it's a chicken and egg thing, and you have to start somewhere, and it has to be started in a calibrated manner. You can't wait in any trading environment for the liquidity to come before allowing participants. So the participants bring liquidity. You have to allow the participants to come. Liquidity will come, after that. So I think, I don't agree with that logic that because there is not much liquidity, you don't allow. If you allow participants, liquidity will come. And let me tell you, there are enough enough and more commodities which are global in nature and that cannot be manipulated because they are not traded. Let's take off bullion, gold, silver. Let's take crude oil. Let's take off in the agri side, soybean. Let's take off, there are so many other commodities I can talk of which derive the price from international markets. There are trillions of dollars worth of trading happening in those commodities. And the moment you have more participants, the trading volume and trading, the nature of trading itself will change in Indian market. And I think that's what the regulator is attempting to do, and rightly so. You have to, of course, in a calibrated manner, onboard the institutions. You can't, on day one, try to do everything together. You have to do in a calibrated manner, and I'm confident that SEBI will do exactly the same thing in a calibrated manner. They will allow it. And if you see the pattern in which it is moving, first they allowed AIFs, which is the appetite of risk for an AIF is supposed to be much higher than a normal mutual fund. Then now they're talking about allowing mutual funds. And I'm sure after some period, when there is enough and more liquidity in the market, they will allow other institutions, including foreign institutions, to participate.
One question which, Lakshmi, I wanted to check with you is the leverage part. When you brought in AIF, you had limited the leverage to 2 times the portfolio or the basket which you're looking at. What could be the leverage for mutual fund in that sense? How much would the regulator be comfortable in allowing a leverage for a mutual fund scheme or a fund house?
So at this current juncture, if you look at the mutual fund portfolio of existing asset classes, which is namely fixed income and equities, leverage is a sin. So we're not allowed to leverage. It's obviously you're allowed to hedge your portfolio, whether it is in equities or in fixed income. At the initial stage, again, I'm not trying to preempt anything. It would be very premature to expect any sort of leveraging coming in an exotic, something which is new to the country or new to the mutual fund space, and allow leveraging also. So you have, as I said, asset management offers 3 sets of services: mutual funds, PMS and AIFs. You're already allowing it through AIFs. Probably you could have PMS also do some sort of commodities derivatives, and then obviously comes in mutual fund. Mutual funds is the most retail form of participation. So I would be very surprised, happy to have it, but very surprised if you see some sort of leverage permitted, at least in the initial stages.
So it would primarily be limited to hedging of the portfolio or the basket which you have, and that leaves very little number of products which are available for commodities in the commodities derivative segment, right?
No,
you have to create new products for mutual funds to participate.
Yeah, so there could be variations around the metal space to precious metals, namely gold and silver. Today we just have gold ETFs, as I said. A very limited participation in commodity space is where we have offshore funds. Again, the size is very minuscule. Of the 20 lakh odd crore industry, we have less than 5,000 crores in offshore funds, and within that less than 500 crores in global commodity funds. So I'm saying probably you could start innovations at those places and try to figure out how best you can manage non-leverage or plain pure positions. It could be a long only portfolio for all you know, because you have other variations possible through AIFs. And as he rightly pointed out, AIFs are slightly for the most sophisticated investor, because the ticket size is also 1 crore plus. So there you can allow for some sort of experimental stuff also, because the expectation is a slightly more savvy investor is coming, contrary to a 5,000 rupee investor, which is supposed to be mass retail.
So the gold ETF is actually backed by physical gold. So
that's
the position is very clear. But
that's
here,
right.
If you want to trade other derivative products, you will be taking position in derivative market that will have to be rolled over. So this different from the normal mutual fund, which only takes position in cash market, or the long only funds, as you called it.
Right.
So this is going to be a completely new product, a new design, will require a lot of explaining, understanding.
I don't think so, because today if you see the equity arbitrage category is quite popular in the mutual fund fraternity. That involves taking position in cash markets, in equities, and simultaneously initiating a futures short position in the derivatives market. That has evolved over time. So a category which was less than 5,000 crores is almost heading towards 50,000 crores. And that has got participation from retail, HNIs, institutions alike. Similarly, in current equity portfolios, there is provision to buy options. You could buy put options, you could buy call options. You're not allowed to write options, but you can hedge portfolios. You can take futures positions. You can do all of that. Alongside that, if you see some of the close-ended strategies in India which have been launched, you have long-dated put options being bought or long-dated call options. So it's a market which has evolved over time. So, you know, I could have never imagined mutual fund houses buying 5 years back maybe 3-year put options or 3-year call options. So now those sort of options are available, and there are takers, and the takers are predominantly in the retail and HNI space. So I don't think you will require education per se for the concept, but yes, depending on the underlying, depending on what you are trying to bring to the table as a proposition, probably that concept will require some bit of education.
So, Mr. Ravi Kumar, what kind of work do you think the regulator, exchanges and the AMCs will have to really do before we launch these products?
As the other colleague said, this is a good move, but you also need to bring institutions, both domestic as well as international, to add to the categories of participants so that the depth increases in the products. I would, if I were in a mutual fund participant, not immediately, but I would work in as a part of balanced funds, adding up to 5% in a few commodities, gold and maybe petroleum and some of the metals. Draw up a scheme. The whole process will take 6 to 8 months because the settlements have to be proper. The exchange mechanisms will have to be well understood by the mutual funds. There have to be approval, both internal and external, for the scheme and marketing. I am not seeing this taking off in the next 1 year. But the fact is, it is an enabler, and slowly it will take roots. And one thing, insofar as agri-commodities is concerned, I don't think the policy is ready, because as you get financial investors into commodities, the prices will move in one direction, and the government cannot then stop the contract from being operated. Therefore, I don't think agri-commodities will immediately get into this scheme of things. Some of the non-agri, particularly as somebody said, energy and bullion, these are the commodities which could come, but the current liquidity, in my view, and depth is not enough.
So basically we're talking about gold, silver and crude maybe.
Yes.
And possibly Lakshmi metal, base metal, or Indian market is not yet ready, you'll have to go to the overseas exchanges really.
Yeah, maybe not in the immediate, but yeah, that could be a logical extension. So you first start learning alphabets and then you start forming 3-letter words. I think base metals would form part of the 3-letter words category for now.
But you think it will be a long-run process, because as Mr. Ravi Kumar was saying, that it could take as much as 1 year for it to settle down and, you know, see how the market functions. On the other hand, when you spoke about asset classes, you spoke about PMS as well. Today, the regulator also spoke about that they are looking at the framework for PMS to get into, and that's another 100,000 crore market, which is and growing at a very fast pace. Right. Will it require the same kind of caution, because there you have the HNIs who have a bigger ticker size, investing. Will you look at the same kind of framework for them as well?
See, I'll tell you, the risk management contour doesn't change from retail to HNI to the evolved customer or the institutional client, because in a good market, risk is the most oft-forgotten 4-letter word, is what my sense is. So I think keeping that aside, the focus rather should be on getting the operational logistics right, because for mutual funds, we have an NAV, a daily NAV, which needs to be computed. Yeah. In case of fund of funds which operate in overseas market, the NAV is actually computed the next day. So you have certain forbearance with that. It's not, declared the same day. Likewise, in commodities, you have a very different cycle of trading. The markets do not shut like equities at maybe 3:30 or fixed income at 5 o'clock. It's a much long run market. So I'm saying those are the operational plug points or the requirements that will be different from the way the mutual funds are operating today. And having understood all those implications, as an industry, you come together, decipher what those means. That is when you can actually see the launch or even the filing of a strategy with SEBI. So it's a function of how soon the regulator comes up with this guideline or circular, or as you may call it. What is the scope of it? What is excluded? What is included? So for example, today it's been 10-11 years we have gold ETFs. ETFs. Why don't we have silver ETFs in the country? The reason is storage, because silver, we're talking about 25, 30 kgs, the big quantums, the volumes, obviously because of it's a poorer cousin of gold in terms of value terms. So you're talking about huge storage requirements compared to gold, deep purity. So I'm saying you have to take one step at a time. So we don't want to bite and chew it into all of it together. Otherwise, then you'll end up with indigestion for sure.
Okay, Mr. Ravi Kumar, one last question. Over last 10-15 years, we have had instances where certain products in Indian financial markets were misunderstood not only by the retail, but even HNI investors. So how do you think these products should be designed, approved, regulated, and then sold to the consumer so that he understands what kind of risk is he actually taking?
It has to be gradual. You need the simple products first. You need adequate volumes and depth in the products and the settlement. And it's only as the depth increases and participation enlarges, then you go into variations and adding to complexity. This is a 5 to 7 year play, but this is the first step and it's a good step, and it is in tandem with the day before announcement by Reserve Bank of India allowing banks to offer brokerages in COMEXes. Participation of banks is the logical next step. If mutual funds can be allowed, why banks can't? The bank treasuries also can trade in commodities. They are not allowed today. You can allow them to trade in commodities. The next is the institutional investors, international and domestic. As these players come in, they will come in for a fewer commodities initially, but it is finally the volatility which determines and the risk which determines which commodities are taken up. And the mutual funds, as far as they are concerned, they must understand the customer pulse and add it to those schemes which are diversified as an added asset class. That's the route I would take.
Okay, Mr. Ravi Kumar. Thanks a lot for joining us, and thanks a lot, Lakshmi and Sudeep, as well, for joining us in this discussion. Well, as our participants really have been telling us, this is just a beginning, and we'll have many more such discussions. But as of now, this is time to sign off. Thanks for watching Bloomberg Quint.